Welcome to Punch Card Investing, a weekly show dedicated to all things value investing. Whether it be analyzing companies, pitching ideas, or discussing moves by the best investors in the world, we're trying to get one step closer to punching an investment off of our cards. Let's get started.
Thank you, intro man. It's been a few weeks since I've heard that one. Sorry for the lack of episodes in the last couple of weeks, everyone. But we're back on with a, I don't want to say it's not exciting. It's a bit morbid, perhaps, talking about business struggles, but it's ever necessary to understand in this world of business. I'm joined by Mike Sharp again, who is becoming a staple on the channel with your, do I call it a hit series, Contrarian Corner? People have received it well.
Yeah, let's call it that. Let's call it that.
So yeah, it's always good to have you on the live show, though, Mike, and good talking with you. So we're going to talk about, what to do, what to look for when a business is going through a tough time. Mike and I are the owners and operators of a couple businesses going through some struggles right now. So we can talk about that from our own personal experience, as well as potentially connecting that to the public markets, because frankly, business goes a lot deeper, business is a very widespread thing, and there's so many different lessons to learn at so many different levels, and you can apply them to all the varying perspectives and things in this world of business. So with that said, before we get into that, please be sure to like, comment, subscribe, all that great stuff. It helps the channel out a lot, and we appreciate it. Be sure to subscribe so you don't miss future episodes as well. We do have a podcast version of all of our episodes, so do check that out if you would prefer that. If you're on the go or something like that, we do offer that, although I think you are able to sort of listen to this as an audio version with YouTube Premium. So either works. We just want to make sure that it's accessible to the maximum number of people. So if you're a podcast person, we do offer that as well. And one other public service announcement for the channel. We are looking for more creators, more hosts who can come host their own show, much like Mike, you've come on in recent months to host Contrarian Corner. Something along those lines, or maybe a completely different idea. If you have one, be sure to reach out to our Instagram. That's at Punch Card Investing. And if you have an idea there, definitely let us know, and we can see if we can make it work and potentially grow this community even further of like-minded long-term value investors. If you have something that you'd like to contribute, or if you have an idea and want to discuss it, then please reach out. So now, let's get back to business struggles, Mike. Why don't we?
I can't wait to talk about this.
Yeah, I know. We just got to rip the Band-Aid off of it. I'll volunteer myself for now. And we'll get to you in just a second, Mike.
Sure, yeah.
So maybe I want to talk about as sort of an umbrella topic here is diversification, the famous Peter Lynch concept, or at least he memorialized the term. And the idea of investing in something that's maybe outside of your circle of competency, but maybe looks good on paper, and you just have this money you want to place somewhere, and you just decide to kind of buy whatever sort of meets a few minimum criteria, but you're not necessarily an expert in it. And it ends up sort of pulling the rest of the pie down, or the rest of the business down in some way, despite it otherwise looking like a okay investment independently on paper. It's kind of what the idea is all about. And I feel like I've walked into that, or at least I did many months ago when I bought this steam cleaning business that I've talked about on the channel before, and also over on my own channel, because it has been a struggle, especially in recent months. And I've been increasingly involved in the business just as the problems have kind of mounted up. It's a weird thing where pretty much as soon as I bought the business, the sales were immediately less than the months before I had bought it. So that are already starting on a pretty poor foot. At the time, I was still working in big law. So I was working a very intense schedule there before I started my own law firm. And during that time, I didn't really have a lot of time to get in there in the trenches. So I hired a manager right away. And without just to clear it up, my manager has done a nice job overall. And that is with some otherwise tough circumstances. I promised a lot higher sales as sort of our base here, but it feels like the base actually probably wasn't as high as I thought it was. I'm just still trying to figure out why. I don't think it was a fraud issue or anything like that, but I think I did something incorrectly at the beginning to kind of transfer all of the ad accounts, all the marketing, all the accounts over. I must have done something wrong. I'm still trying to figure that out. But in the meantime, there's plenty of problems to solve. But
what was the sorry,
mm-hmm.
can I ask a question? Was the idea that it would be a sort of a self-sustaining business
Exactly.
when you bought it, and you could just
Exactly. And that's why, so I'm not a steam cleaner at heart, and I bought a steam cleaning business. I'm an attorney. I'm an attorney and a real estate guy. It's probably, if I had to pick like a sort of area, it's that. And at least my core competency, if you will, is in that area. And steam cleaning is not that. But I thought, as the wise investor I was, okay, it's a simple business, which it is, frankly. It's cleaning. It's not like it's super complicated, but it's definitely not the same. I don't have the same sort of competitive edge as I might in something I'm more knowledgeable in. Like, I feel like I'm a better real estate investor than I am a steam cleaning operator. I'm a better attorney than I am a steam cleaning operator, or whatever. Now, part of my thinking, though, was I was going to try to learn how to become a better operator, and it has done that. So I don't want to say it's been a completely wasted experiment, but I have been disappointed in the results thus far, and trying to pick up the lesson there of what I did wrong exactly. I think it really stems from the diversification sort of lens. I thought, okay, I got money coming in, I'll diversify into businesses, get some cash flow, and then use that to invest in real estate some other time or something like that. In hindsight, it's like, well, if I'd just taken all that time and effort and money and just put it towards more real estate, even with prices as high as they were, and just really buckled down and trying to find great deals in a tough market, or something to that effect, or just doubling down on myself now as an attorney, that's been going pretty well. And we can talk about pivoting in a bit, but I definitely have some second thoughts on how I'll be approaching my business portfolio in the future. It's not that I'm going to call it quits on this one just yet, since, I mean, frankly, it hasn't even been a year since I've owned it, so a lot can change in just a few months. And we're heading into the holiday season, which does tend to get busier historically. So far it's been okay to get going into October. We've made some major marketing changes, but I guess bottom line is it's been a lot more effort for far fewer results than I would have thought, and it's been frustrating in the process.
So with the diversification, so if we, like, for people who maybe haven't read Peter Lynch, I mean, the idea I think he talks about is, I think there was a big mania where like a lot of companies were just buying up other companies and they created these big conglomerates. But
even if they're way outside of the
they were just scooping stuff up to get bigger. And the idea was there was no sort of synergy between the businesses. Like, sometimes there's overlap that makes them make sense, but but he was talking about ones that have no sort of, like, there's no real argument for putting them together. You're just kind of compiling them together. Like, whereas if you were, let's say, running a sort of a different business, but with a similar structure, like where you had a management and a bunch of staff that do a certain service, you could use that towards the steam cleaning business. But being an attorney is kind of nothing like steam cleaning.
Sort of. My thinking was, okay, I'm not going to actually be steam cleaning carpets myself, which maybe is a problem because I don't really, when you don't truly understand the product, having not been in the trenches, that is an uphill battle. I just thought, it'll be fine, I'll hire someone who does, which, I mean, there is merit to that thinking, but you got to execute well. And obviously I didn't execute something right. But yeah, I hear what you're saying for sure.
In my business, that, like, I do know that problem. And like, as the businesses get bigger, you end up with specialists, right? So in my business, like, I've always been pretty, one of my policies is that I can do every job. So I actually spend time to even the low level jobs. Like, I do them all. So I know exactly what the people are doing. Like, I don't do it for long, but I find that stuff actually helps. So I think maybe you just need to steam clean for a day, Jack.
Yeah, maybe so. And I had to be clear, I have been on a few jobs, but not very many. And I wouldn't call myself
you have done it though.
Yeah, but I'm not completely blind, we'll say. But,
okay.
But I do like that idea, though. Switching over a little bit to the law business, I'm really starting to ramp up. I'm getting some good traction over on the law side. So I'm kind of at this crossroads of like, okay, so just kind of ignore what's going on at steam cleaning and double down on this so far much better opportunity that I've got going. But a lot of the fundamentals that I have learned in this past, what are we at, 10-ish months, almost 11 months of this steam cleaning experiment, I've definitely gotten way more comfortable with hiring and firing, for that matter. And and I feel like I have a better idea of what to look for and not to look for when hiring. learned the importance of, for anyone who's on the phone, scripting and making sure that that's pretty tight if there's any sort of sales element involved, among plenty of other things, standard operating procedures, all that, and making sure things are clear for the next person. And also marketing for that matter, just running ads and scaling ads and creating different campaign layers and all this sort of stuff. That's what I'm working on right now on the steam cleaning side. But and also for the law side.
And you're doing all of that yourself?
Mostly. So I have editing help for videos. For the steam cleaning side, we do have a marketing company. They're quite cheap. But I'm kind of directing a lot of things on what to set up, and I'm sending over footage or not footage, but finished ad copy and that sort of stuff. Whereas on the law side, it is all myself, but I haven't actually done a whole lot to set that up on law yet. It's been mostly towards the steam cleaning side. But in these coming months, I'm hiring an intake assistant as well as an associate. And this next month is the plan. And from there, I'll get some hours back to pour back into the marketing on law. Since I think that's really just where my bigger opportunity is. I feel like I should almost not quite cut my losses, but it's like, okay, where do I really want to spend all my hours of the day? What's the highest grossing opportunity in the near to medium and long-term future? Is it really in steam cleaning? Probably not, or at least that would be a much harder path for me, given my skills as an attorney. And I think the management skill gap would be pretty similar in both sets. So it's okay if I'm equally as bad or good as of a manager in both businesses. You got to look at all the other factors. I'm more knowledgeable on real estate law, and we do real estate law for the law firm side. The marketing skills are about the same for each. So what I'm trying to say is like the difference in skill, it definitely leans a lot heavier towards the law side, just because that's what I'm more comfortable with. I've worked in law firms before, seen what works well and what doesn't work well, much more than I've seen what works well at a steam cleaning business. So that's probably one of the bigger perspectives.
You could argue that you have a much bigger moat on the law side too, because you have a degree, right? Like that is a major hurdle but to get into the steam cleaning business, like I could start one up tomorrow. I probably wouldn't do well, but I can't be a lawyer and compete with you tomorrow.
Yeah, that's a good point. I've complained about that before, just protectionism in general, but I certainly benefit from it. Like, just having the degree wall. So yeah, it is a barrier to my benefit. And it's a big reason attorneys can charge such high rates. And couple that with, if you do good work, it's not a runaway effect, but you have a lot of room for growth because it's a relatively low expense business. At least on my side with real estate law, a lot of it can be done virtually. There's not a whole lot of, paper filings anymore. Thankfully, a lot of it can be done digitally, or just maybe mailing some things if you need to. So that's a big advantage for scaling. You can hire people in all sorts of places as long as they're licensed to practice in the state, of course. So, but yeah, it's the protectionism point is noted and is definitely relevant.
And you make a good point about resources too, right? Like as investors, we think about, okay, what's the best use of my money? But like, there's also a scarce resource in time, right? Like, how am I going to maximize the value for my time? And you have to make that choice now that you're very involved.
Yeah, I heard. I'm a big fan of Alex Hormozy, and he said on something I heard from him a while back. He was like, when you're an entrepreneur, you feel like you have all the time in the world, but also no time at all. And I totally feel that now. I feel like I got freedom. I can work on whatever I want to some extent. But then it's like, if I want to actually keep the standard of work that I want done, it's like, there's so many things to do. There's always something to work on. And every hour you spend outside of that, it's like, you're thinking, at least if you're wired in a certain way, you're thinking of the opportunity cost of, what if I spent another 2 hours on this thing that I want to get done, or that would make this process so much easier, or if I spent it towards hiring someone else or whatever it is. There's always something to do. So in that way, it feels like you're just never have enough time. But you're not answering to anyone else. So you get that sense of freedom back too. So it's a weird paradox. I don't know if you feel that same way as an entrepreneur yourself, Mike. Is that an accurate take?
Yes, all the time, but no time. Because when something's on fire, it's your problem, right? You've got to put the fire out.
There's no fire department.
Right. And like I've always had business partners, and so that's different from your situation. Like your situation is it's all on you, right? Like, and I find that in the hard times, having a partner there who could maybe see it from a different angle, come up with, or maybe take some of the load too, is so I commend you on, because it's a hard go, like to go for it yourself and just be the one man show that's got to take everything on your own shoulders.
Right? Yeah, it's a weird. Like we'll see if it's a good decision or not to bring on partners right away. I always like to think I'm open to it, but I don't know if it's a pride thing or like, oh, if I give up whatever percent now, like how much is that going to be 5 years from now? I think of that a lot, and maybe that's too short-sighted. If the pie could be so much bigger if you get someone's skills in, I think it obviously very much depends on the partners. Are your partners, do they tend to be wildly different skill sets or different areas that they focus on?
Yeah, I mean that's the goal, right? Like, so I was originally. I'll tie this into what you're talking about. So we're going to talk about business lessons a little bit, right? And so I had one business partner to start who's a very different person than me. And then what I did was I had some key employees that I thought, oh, these people are very good. So I made them a sweetheart deal to buy into the company. Sure. And like I'm going through a really rough. I'll talk about my stuff after, but I'm going through.
I'd love to know. I'd love to know in a constructive way.
and so now we're in a hard spot, but I've got 4 employees that are shareholders, and everybody's in on the fix, right? So it's like you know what I mean, like you. So I think that was an accidental good choice on my
people are aligned, right?
Yeah, and the people. So you look for the people with the skill sets that say, okay, that's complementary to my skill set, and like you're saying,
right?
But that's more of a, because my business has been around for longer. You've been in it under a year, right? So you haven't had time
for the steam cleaning side, and then law even less. But I hear you there. I have considered doing that with my manager for the steam cleaning business. Part of me is just like, man, do I just give them half the business and then just let them roll with it and just, focus on my other stuff? I've definitely given that some thought. But that would be more of like kind of it almost feels like admitting defeat. I'd love to get your thoughts on this too, just for business in general. When is it time to call it quits? Is it it's a certain dollar amount, certain amount of time invested, certain amount of things tried? Because ultimately there are some things that just won't work or won't be worth the time. How do you make that determination, whether it's pursuing new projects or ending current ones?
Oh, well, we have a policy in our company that says fail fast, right?
Okay.
So if you try something and it's not working, don't drag it out forever with hope, right? But I think if you're talking about a full business, it's not quite that simple, right? Because it's not just a project you can kind of shut down and eat the loss. But I mean, like if you're in a position where you're going, well, I might just let it go. If I was you, I would say, well, what are my options before I do that, right? Like maybe I can get this guy invested, and he can right. He can take the look, say, I need you to operate this while I'm working on my law business, and I'd love to get you invested, because I actually believe what Charlie Munger says, right? Show me the incentive and I'll show you the outcome, right? And I've personally noticed a huge difference in the people that went from being employees to being shareholders. Yeah. They're invested at a totally different level. Once that happens, they start working extra hours. They start really acting like I act.
They're aligned, right?
That makes sense, right? So, I don't know. I don't want to give you advice, but my experience. No. It's positive.
Yeah, I mean, you've been doing this longer than I have, and and it makes sense just logically speaking. It's okay. They're aligned as owners because they actually are owners. And I suppose if I were to make that offer to my manager explicitly, like, hey, here are the terms we want to do. I've kind of floated it out there, but I haven't really put it to paper. It's like, here's the offer. What do you think? If he were to say no, that might send a message of some sort, like he doesn't believe in it either, or something like that. Whatever the case is.
And sometimes you can ask them what would be a good arrangement for them, and they might give you better terms than you would offer them, and they'll be probably more invested in it because they came up with the idea. You know what I mean?
Yeah, we've had some conversations about that, but a lot of the problem is it's not in a financially strong position, so it's kind of hard to make certain things work. If we were throwing off tons of cash, you could be pretty creative. I think a lot more than maybe now.
Is it cash flow negative? You don't have to answer that.
No, it is right now. And that's why it's been just like, oh man, like just have this baggage right now. And I've tried the I've tried the old this has always been very frowned upon by many business owners and investors, but I tried it anyways. But try throwing money at the problem. Okay, let's hire a few more people here, see what happens. And that was very short-sighted, I think, and didn't really work. I am starting to get some traction though to kind of recoup with kind of the new marketing plan I was talking about, adding a lot more content out there because there really wasn't any before. Creating retargeting campaigns, just like a proper marketing campaign that we really didn't have before. And we've seen some positive results. Like I redid all the landing pages, and our carpet cleaning opt-in rate or conversion rate, like we get their contact info to call them or they call us. That went from 12% up to 19%. So 19% of the people who come onto the page will convert. So, that's a big improvement. So, I'm trying to do a ton. It's just frustrating because, that one change isn't enough. I have to do that little change like everywhere. And then it'll start to add up and make a much bigger difference.
But at the same time, it's taking away from.
Exactly. Yeah, it's an opportunity cost. This is just trying to get it back to break even, and it's like, well, could I be making a bunch more money as an attorney doing the same sort of marketing efforts on the law side, where we can charge hundreds of dollars an hour and I can hire someone who can handle this or who can handle a few of my clients or something like that, get an intake assistant up and running. And it also is just a business I understand a bit better, how to package offers and what are appropriate rates for something and all that, just because I have more experience in it. And I'm getting more comfortable with steam cleaning, of course, but I think you see where I'm going though. So yeah, opportunity cost though, very much a thing. Fail fast. I like that. Tell me more about what's going on your side of things.
Okay. So, where do I start? So my business is a fundraising business. So it's a service, basically like a sales company. So we raise money for charities and then they pay us for the donations we raise. So I have armies of these fundraisers, right? And they go out and they collect donations, they harass people. Everybody hates us, but the charities love us because. Yeah, right. So like, I'll just explain the business a little bit. So we're the income for the nonprofits that right? Like pick a nonprofit, they outsource all their fundraising to us, and that's their income to pay for their projects and their staff and everything. So there's a sort of a natural moat to it, because if they fire fundraising companies, then they don't have any income, then they fall apart because they don't have any income, right? So there's like we're somewhat I would say non-cyclical, maybe not counter-cyclical, but non-cyclical.
A little more insulated.
I was going to ask that to you. Like, do you think that your business, is it potentially like an a macroeconomic problem?
Yeah, I'd hate to just point to that. It's not my fault. It's just the economy. I'm sure that plays some role. It's cleaning is like I don't want to say it's discretionary because it's not. You got to get stuff cleaned at some point, but you might have more people either waiting longer or doing it themselves. I don't think to the level that we've had where, sales are almost 50% lower than I might have expected. I don't
50. That's
yeah. For the beginning of the year was so slow. It started to pick up now to where we should be over that. But yeah, early on, I thought, I'm like, this could be a problem if this continues. And we've had some lumpy months where some will be more on pace or where they should have been, but others it'll be well below. Right. So that, enough months passed. I'm like, okay, it's time to like really get in the trenches. That's what I've been doing in the last quarter, really, to try and right the ship. And some things have not worked, just hiring new people and kind of seeing what sticks. But more methodical approaches on the marketing side have been more positive. We hired a great administrative assistant who's helping with the quality control side of things. So we still get great reviews on the services we do. We're just trying to find a way to actually reach more people because it's such a commoditized business. It's very competitive. There's plenty of great options. It's trying to make ourselves prominent as one of the best, and at least for repeat customers, trying to stay in their mind. That's probably the hardest part of this business because there's very little loyalty across all the brands, because it's often people just be like, okay, I need my carpets clean. It's been 2 years. Quick Google search, and whoever pops up, so they'll take whoever's cheapest in many cases.
Yeah, it's not frequent enough to be like last.
Yeah, So, anyways, yeah.
So it sounds like we might have a similar problem. So what happened with us is we were terrible at our job for a year, and we got fired by 30% of our clients at the beginning of this year, and so that it took about 6 months, but we lost. Like, that's a real fast decline in sales for us.
That's revenue too, and not
Yeah, that's revenue, and the problem we come up against is the fixed costs, right? Because you have this certain level of fixed costs, and if the revenue comes down that much, it's really difficult to reduce the fixed cost, which is people, right? Like it's because if you try and remove people, lay them off, there's a huge cost of that attached to that, especially in Australia where my business is. Like, it's very employee sort of centric. So there's huge payouts just to remove people. So we're kind of like, well, in the investing term, it's operating leverage, but in the wrong direction, right? Like,
yeah, exactly. That's what I was thinking. Like, when it's revenue, because it's multiplying through your whole cost structure, but in the wrong way, right?
Oh yeah. Yeah, like we were talking about Sleep Number a while ago, and they have a similar problem, right? Like their sales are coming down, but they have these huge fixed costs, like because they've got to keep all their stores open.
Yeah, tons of stores,
and you can see their earnings just evaporate as they lose 10-20% of their revenue. And so that's kind of what's happened to us. So, like, admittedly, we were not good at our job for a while. We probably deserved to get fired. So we spent the whole year fixing the product, but the reputation damage means the sales come later down the line. It doesn't come right away when you fix the actual service. So, so that's where we're at. Like, I actually had you were asking, like, when do you throw in the towel? I was actually having that, like if the sales didn't come back in a certain amount of time, I would have had to throw in the towel just because the cash burn is too high. But it looks like we've sort of turned the corner now, which is very, like in the last 3 weeks.
Oh, so, good. And that's great.
So, but I haven't been doing any videos or anything, like, and it's just like
I've slowed the production as well. I think I've done a couple for the law side, and then plenty of marketing videos, but they're not on YouTube. So yeah, same thing. It's like, man, you just gotta buckle down sometimes.
But I think one of the lessons is, like, it's the Buffett lesson, right? Like he talks about the moats because he doesn't want to worry about this stuff, right?
Yeah.
Like, Coke is never going to lose 30% of their revenue because people I don't know how
to a substitute, right?
They're not going to, right? Whereas you and me are in businesses that are like more commoditized, and people can just say, "Oh, I don't like that. See you later. I'm going over here." And there's no, it's not sticky enough for somebody like Buffett.
I wonder if it's a matter of reworking the core offer in some way. I've kind of been experimenting with this recently, but packages, when you put a bunch of commoditized things together and package it in a certain way, it's sort of like Coke, frankly. It's sugar water, just packaged in a particular way with whatever tweaks to it to make it, but it's not like it's some, novel invention. It's just putting a few pieces together. But I think the packaging can make a big difference. I guess that goes to brand as well. And still working out like what some great sort of premium offers would be, sort of an irresistible offer, to quote like Alex Hormozy again. He's very much into creating the offer that's so good that the customer can't say no, even if that's a commoditized business. Like, other people can do the same thing, but you're packaging it in such a way, providing enough value up front because you're getting the package to a good enough size that you actually can produce better value than maybe the cheap guy who's doing the same sort of service, but it's not all packaged together. Maybe that's a potential way to differentiate.
or even like contractual, like, how you go to a gym and they'll be like, it's only $20 for the first 3 months. Just sign this 2-year deal.
Kind of. Yeah. It is packaging like the same thing in a different way. It's a gym membership. There's tons of gyms, but if you package it in such a way, or it's a low monthly cost, but it's spread out, some people might enjoy that a lot better than if it was higher cost, but you can back out whenever. That's a good one.
But it's true, like, because we spend a lot of time like looking for public companies to invest in, right? And I think that sort of stickiness idea is a little bit underappreciated in the value investing world. Like, we talk about it a lot, but the truth is there's not that many companies in the world that actually have that real moat where people aren't leaving, right? Like, I don't know if you got an Apple phone or an iPhone, but like, you can't stop using, you can't get away from iPhones once you're in.
Like, once you're in the ecosystem, right?
You're stuck, right?
I think that's very well said. If you don't have a moat, or when you don't have a moat, things can fall just so much faster, and you don't really appreciate it until the tide actually does start going out. That's well said. I guess, how do you create a moat then?
Well, that's a difficult one.
We talked about packaging. That's kind of like it's like a little moat, but like a proper moat. What is it? Is it an IP thing? Is it? What do you think?
Well, what's there's basically the book of moats. I forget what it's called. It talks about the 7 powers. Have you read that one?
Oh no, but yeah, it's on my list.
Basically, it's the 7 different kinds of moats, and I can't bring it off the top of my head, but it basically breaks down the 7 types of moats you have. So I've got all my guys in the company. I'm like, you have to read this because we're going to build one of these and figure out which. But it does take a long time. Like, you can have you can look it up there. That'd be good if you could pull it up.
I don't know if these are the same ones, but scale economies. So we've talked about that before, but if you can get that takes kind of a while to get to, probably a lot of investment to actually get your costs so low that it's hard to get there.
So that's the Costco, the Costco moat, because they're so big you can't compete with them.
Maybe Amazon to some effect as well on the retail side. Network effect. So that would be a lot of these social media platforms, where you create a big enough community that as it grows, it actually gets stronger just because more people are in it, and then you're now the odd person out of the network.
You're Twitter, because even Meta trying to fight you, they can't do it because you already have that network effect.
Yeah, kind of. Yeah, they have their own independent networks, so. But you can only be in so many before you just run out of time in the day, right?
Yeah, Meta has its own network effects, but it couldn't fight Twitter on Twitter's turf because Twitter has the network effects there.
Yeah, right. It tried with Threads though, and it's not like it was a disaster, but it's going to be hard to just sort of delete Twitter by creating your own, because the network's already there. Yeah,
because everybody's already on Twitter. Like, why would I go to this other network to find the same people?
Yeah, right.
They're already here.
Exactly. Kind of sort of to the same effect is switching costs. That's another moat. I mentioned the contract before. That could be one, but how expensive is it or how time intensive, monetarily expensive is it to move to a new one? I think if you have a long-term contract with someone, that's one idea.
So like Apple would be a switching cost one, because you're saying, it's a time you have to figure out how to move everything to Android, and people don't want to do that.
This article is saying, I'm on amusingzebra.com. A prime example is Bloomberg Terminal. Like once you're in, because that's just kind of what everyone's using. Like, trying to switch to something else is rough. I don't know if I like that example that great, but anyways, another mode is branding. That's kind of a vague one.
Well, that's kind of
that's more just trust and knowing what you're getting. You're getting a consistent product, or you're getting what you're expecting to get at least.
Like the brand is related to something in somebody's mind, like Louis Vuitton, or like that's kind of the one that you were talking about. Like, if you create the marketing, you have a sort of image with your company that people think of.
I think that would be this one is called counter positioning. This would be
I can't remember what that one is.
Yeah, it's in 7 Powers. It says, so the author of 7 Powers, Hamilton Helmer, says the characteristics of counter positioning he explains the characteristics of counter positioning as 1, an upstart who developed a superior heterodox business model. 2, that business model's ability to successfully challenge well-entrenched and formidable incumbents. 3, the steady accumulation of customers, all while the incumbent remains seemingly paralyzed and unable to respond.
Oh, so that's like maybe Southwest Airlines, like the cheap airlines that come in and start eating another airline's lunch. Maybe that's wrong, but
I feel like the only way you get to that sort of counter positioning thing is maybe with some of these other characteristics, like you're the low cost provider or something to that effect.
Yeah. Well, I think, and I'm trying to remember it because I think he thinks because the big incumbents, I think it was like financial institutions.
Yeah, he talks about, he says when Vanguard launched the index fund in the 70s to allow investors to track the market, Fidelity Investments, the biggest fund of the day, did little to stop them until it was too late. Why? Because offering index fund cannibalizes their existing business model. Okay, I see.
Yeah, there you go.
Yeah, okay, that makes sense.
Yeah, because they need the 2% fees. They don't want to go to 0.2.
That's kind of the I guess it's the opposite side of the innovator's dilemma, where you have your whatever thing. I guess a common example might be any technology company. They'll have their product that they just invented, and I guess BlackBerry might be one of the more famous examples ever. They have this very innovative phone. They make a bunch of money with it. Then smartphones come around and they decide, we're going to stick with what we got. We're not going to try to push beyond that. And they end up getting burned for it. So because they were the innovator at the time, and it's very difficult to create something that would cannibalize your leading products to try and make it better.
And it's Blockbuster with rejecting Netflix because they didn't want to.
So many examples, and anyone who once was a leader and no longer isn't probably had that sort of dilemma at some point.
Yeah, totally.
Oh yeah, it's actually mentioned right towards the end of this, the innovator's dilemma. Yeah. Okay, great. Another moat is cornered resources. So that's pretty self-explanatory. If you own all the resource, whatever it is, you have a moat because no one else can create the thing, especially natural resources. But it also is mentioning other things like intellectual property or things that are legally protected that can be plenty relevant too.
There you go. There's your.
And then the last one here is process power. I feel like that was more than 7, but anyways, the last one is process power, and that would mean the barrier comes from its complexity and opacity.
So this one is like TSMC, like
that's exactly what I was thinking. Yeah, like chips.
You can't because they're already ahead of everyone else by multiple years. Like you just can't catch up because they have the process IP.
Yeah. It also mentions, it says, consider IKEA. IKEA's success has been studied by others for many years, yet not many retailers have managed to replicate their success. Why? Key lies in their strategy in pursuing trade-offs, what to do and what not to do, that culminate into a process power. I don't know, that sounds kind of vague. but yeah.
But I think the truth.
I would tend to lean towards your example as well, like chips or something particularly complex that it's just very complicated to even get started. There's so many layers to it. Even if each individual layer might not be that complicated, when you put so many layers together, it becomes complicated just because it's a concert now of so many different elements.
Do you know ASML?
Say again?
Do you know ASML, the company?
No. What is that?
They are I think a Dutch company that creates the ultra, I forget what they're called, the lithograph machines that TSMC buys.
Yeah. Karin was invested in that some time ago. That they sell the shovels, right?
Yeah, but it's like the most complex shovel in the universe, and you can't, like, they've got all 100 pieces from everywhere, and like nobody can even come close to them. So within TSMC, there's even bigger moat on this one.
Sure. I think Karn was invested in that one. I might be wrong, but it was something like that, where it was selling the shovels during the chip rush that we saw some years ago. It's still like that. I don't know where chip companies are at now, but I mean, we saw NVIDIA go crazy, but that's kind of adjacent for the most part. Anyways.
But the thing is with like NVIDIA, or even like, what are the other ones like? Oh man. Anyway,
Intel or not? Sorry, not Intel. Intel.
Intel is a competitor, and they create the chips in house. And AMD was one I'm thinking of. And so like AMD and NVIDIA fight it out, right? But whoever wins, TSMC is making the chips. So whoever wins there, TSMC wins, which means you know what I mean? So we were talking about like moats. Like in my business, we actually had a moat. We had a brand moat. Like when I was living there, I said, okay, we're going to be known as like a really high quality provider. And eventually we got there. The sort of brand that we had, like a client I overheard talking about us said, they're expensive, but they're good, right? So we got this idea that we're better than the competitors, so we could charge 10% more or something. But the problem is, like, again, back to Buffett, I think he says, it takes like 10 years to build up a reputation and 5 minutes to lose it, right? And so we blew up that moat last year, and it's like all the work that we put into it is gone. And like, so I would say like this whole list we're talking about, this 7 powers list, none of them's quick.
No, that's what I was thinking too. A lot of these are such high cost, low cost provider. You probably have to have a massive network to really do that, and low headcount in the meantime, if you can help it. And a lot of those kind of stem from that too. Developing your own technology, that's a mode in itself. Maybe one that might be, I don't want to call it easier to do, but you can do it at a smaller scale, would just be quality of talent. Though then again, if you're bigger and have more money, you can hire better talent theoretically. So, but if you can create a rock star team, I think that's kind of a moat in itself, because when you can attract great talent, that great talent can produce a better product, and great talent will want to work with other great talent, generally speaking. So, and that can be sort of an internal moat that leads to external benefits as well. But also easier said than done.
That's a good one. I think that's a good one though, Jack, because like I don't know if you've been to Canada, but we basically have 2 airlines here, right? We have one called Air Canada and one called WestJet, and they're famous for, like, the WestJet staff are all given shares as part of their package, and if you go on the flights, you get treated much differently on the WestJet flights, right?
Yeah, and the incentives are a bit different,
right? So that's kind of goes to your, like, if you have the rock star team, like, people start, I want to go there because, like, it's not just like tired unionized people who wish I was dead. Right?
There is plenty of that. That's I feel like talent might be a subset of so many of these other moats. Maybe you could call it cornered resources. Talent is a resource, and if you can sort of, I mean, you're never going to corner all talent, but if you can get a really great team, I mean, back to the law example, there are a handful of like mega firms, maybe more than a handful, but there are these mega firms that have thousands of attorneys. A lot of them are actually consolidated in New York. So New York is this powerhouse legal market where so many of the best attorneys in the world will want to go work to. You could say the same about a lot of Silicon Valley tech firms. There's a lot of amazing engineer coding talent over there. And all these top companies, these top law firms in New York, these top tech firms in San Francisco, to a lesser extent, Austin now as well, create these sort of hubs. And there's a reason all the best companies are there, because that's where the best talent is. And if they can get the best talent, they'll increase their moat. So I guess that's the same. Maybe you should. What's the greatest charity market in the world?
London? I don't know.
Go to London. Move. Good. Pick up and move.
So you can. Anyway. I mean, Yeah, that's like, but I think the truth is we're both in somewhat commodity based businesses, right? And
Definitely.
can I ask you a question? Do you say what multiple you paid for the business? Like,
Well, I guess which multiple you're talking about? The one I thought I was buying was what was it? 2.5 times, 2.5 times the posted free cash flow, and that included about $60,000 in equipment.
Wow.
So like, it looks pretty cheap. And now if you factor in a manager price, for that, it was probably you probably almost double that. Maybe it's 5 times, 6 times free cash flow if you're including a manager salary in there, which still really isn't that bad. And that's assuming
you're still getting a 20% yield on your money, which is
right. Assuming everything was maintained. But if sales are immediately 40% less than what I was expecting, then that's remember that margin compression we were talking about before. Yeah. It's going to be faster than that. So therein lies the main problem. But I thought I was getting a fine deal. It's like, okay, what's the worst that could happen? I think if sales went and it's a break-even business, that we can figure that out from there. But if it's deeply negative at any point, that's like, well, crap. Now I got to put more money into this thing just to keep it afloat, try and fix things, and now it's much more of a headache than I might have bargained for. So yeah.
Oh, that's interesting, because I've actually explored selling my business in this process, and so like finding an external investor like you, it's hard because the cash flow is negative, right? Nobody's gonna
exactly.
But what I figured out is there's other businesses that that can get the economies of scale if they're in the same industry, right? So like I've spoken to somebody who is a couple of people actually from other agencies where they would just take our fundraising and eliminate all the
part they want
costs, and it's actually profitable for them to do the deal, right? So that might be another, if you can find somebody else who can get to that scaled economy by buying you, it might make sense.
Because of how I'm wired, my thinking is I'll buy my way out of it. I'll buy another competitor, but I don't want to
do that too.
But I don't want to magnify the problem. I'm actually quite scared of doing that now. That's why I haven't done that. I've had the opportunity to buy sort of adjacent or even the same businesses, but I've just been scared to pull the trigger because, if I can't get this much smaller version of it right, why would I be able to do the bigger version? So I'm hesitant on that, at least for steam cleaning. Maybe I'll acquire a law firm sometime, but that's kind of a different game though with law, because there's very limited non-compete rights, and the moat isn't so much between firms as much as it is. Let's just say the talent moat in law is tricky because there are no non-competes, because everyone has a right to counsel, generally speaking. So you can't, a firm can't just like slap a non-compete clause on an attorney. Oh, you can't practice real estate law in this state for that's actually not allowed under state like ethics codes. So technically, attorneys can just kind of move wherever. Where it gets tricky is when you pick up conflicts of interest, because everyone has a duty of confidentiality to their clients, and there's attorney-client privilege and all this. So that's where the real difficulty comes when it comes to switching firms. But technically, it's like if your clients like you and you want to move, you can bring them with you. That's why it's actually quite difficult to scale a firm quickly. Just because if an attorney's not getting what they want, they can pretty easily move and take some clients with them in many cases. Assuming
that's a similar problem that I have with because people can just move agencies in fundraising. That's a tough.
Do you do non-competes or anything like that?
I do.
Australia is, but they're probably pretty strict on that, if I had to guess.
I just have it with the senior people.
Okay, yeah.
Because it's,
it'd be worth the time to pursue if it came to that.
Yeah, I haven't actually had to sort of fight anyone on it yet, but it's like definitely with the employee shareholders, right? They know that they can't go just because.
Sure. I guess that makes sense because it'd be against their own interest in that sense, unless they can get equity elsewhere, which sounds unlikely.
Because have you heard of Australian Family Legal? That's one of those stocks that I own.
Yeah, I don't know if you mentioned it to me, or might have been Frank long ago mentioned it to me because he was in the KPG position. So sort of a legal, not version of that, but some similarities from my understanding, right?
Yeah, no, it was. I originally heard it from him, and so I've been in them for a while, and they're coming up against this problem you're talking about, where it's like they've really got to. It takes a lot of work to get the new lawyers on to build growth and actually retain them, right?
And
like
keep them. I
think
that's a big reason law firms. Once you get to a certain level, they generally want to make you a partner and get you bought in, so you don't go and take your book of business elsewhere. So that's why partnerships are so common, because it's
see. Yeah.
That maybe it's exactly that. It's that incentive. I didn't really put that together until now. It's like, well, yeah, it's because if they don't get the ownership they want, they'll just leave. So might as well give them the ownership and get them invested. So,
well, you're making the carpet business sound better, or the cleaning business sound better, because you can actually get a scale moat there, and the employees could be almost irrelevant if that makes sense. If you have the actual scale.
I mean, kind of. Yeah, we do not have that kind of scale, but yes. That's where you're going up against the ones that already do have scale, like Stanley Steamer, or I don't know if you're as familiar with all the steam cleaning brands out there, but the big dogs that are nationwide, and usually it's a franchise model, actually. So, it might actually end up being a smaller sort of scale there, but they have a marketing budget behind them, and it's tough to compete with when you're small, at least for the low cost provider sort of thing. So we try to focus on quality because of that. And that's what I'm trying to look for, more premium packages to offer, just lean into that. Because when we do get the job done, we get nice reviews, and the quality of each individual job has been solid since we kind of fixed a few things. We had some problems over the summer, and that was part of our problem too, for when things started turning worse, even worse than they already were.
You could focus on the high end niche.
Yeah, right. Just kind of lean into that some more. Be like, here's some premium offers. We can do a few services at once, and I think that might be something we lean into. Get more of those $500 plus tickets rather than a bunch of these $150 tickets that we might have. That's going to add up pretty quickly if you get some of those.
That might be worth looking into.
Yeah, that's I'm kind of leaning, and same with the law side. It's like there are so many people who have like $100, $200 cases, and I'll take some of them depending on maybe it leads to business down the line, or if I have some extra time, I could do it. But I guess you could put it this way: if I charged $100 an hour, I could get a massive influx of clients, because there's tons of people who would pay that for so many different things. But if I charge $400 an hour, I will now cut out tons of people who will never do that. But now I'm only attracting the people who actually would pay that. And that's a different kind of client. That's someone who probably has resources or has a big problem and needs help with it. And, that's probably a bit easier to build a practice around. It depends on what you want to do, of course, but I'm thinking about that a lot more as well.
And then you build your whole brand around servicing that.
Yeah, right. You want to lean towards that. I like the commercial side, for example, commercial real estate tends to be more complex than maybe a residential deal, but often actually not by a whole lot. It tends to just be the scale is bigger, and there might be more work to do, but the work really isn't that fundamentally different than a small residential deal. So if I can kind of lean into that, and get more of those commercial clients as opposed to residential clients who might pay a higher rate, who definitely need someone in their court and might have more scale. They might have a full portfolio I can work on rather than just a house. It's all good work, of course, but once you get to that point where my plate's full, it's like, okay, time to start saying no to some things and leaning into the things that could really drive scale quicker. I think you could apply that sort of framing to pretty much any business. It's trying to get to more of those, we'll call it A+ customers, the ones who maybe are not as price conscious and are really just looking for great service, or want to be able to sleep at night. In my case, because I'm trying to mitigate my clients' risks and explain the risks to them. They're really banking on that more so than like, oh, can I get an attorney for $50 an hour cheaper or $100 an hour cheaper? They're not as worried about that as much as quality. They just want to make sure they're getting a good product and that they can sleep well at night. And you can apply that, I think, to any business.
when I first moved to Australia, I moved to Australia to start and build this business. I was working for the parent company before that, and the guy who was the sales, the guy who did all the sales for the Canadian company, who was really quite strong. He said, okay, he drew this triangle, and he said, you have to figure out where you're going to compete. You got price on one corner, quality on one corner, and service on the other corner. And he says, you never compete on price, because that's like you're never going to make
race to the bottom.
Yeah, you just end up, just trying to squeak out small margins everywhere. And I really took that to heart. I'm like, oh, okay.
I learned that one pretty quickly on steam cleaning, because there are guys who, so just as a reference, what we and some of the bigger players charge is, let's say you wanted to get 3 bedrooms cleaned. It'll be between like $120, $130 before tax. And that's pretty consistent with all the big players too. Mm-hmm. But then there are these guys out there who sell 3 areas for $69. It's like, okay, you're never going to compete on price there if you're trying to make any money, because just to get a guy out there, you're paying gas, wear and tear on the machine. Then you actually have to pay the dude too. And like, what are you left with at the end of the day? Unless your cost of acquisition was 0, this doesn't make any sense. And if I were to compete on price, okay, great, we'll do $50 for 3 areas. Well, now we're losing money per sale, which doesn't make any sense. So how do you differentiate? Yeah, I think he nailed it. You generally don't compete on price, because it's a race to the bottom, and consumers win.
Well, in that 7 Powers book, the one where what's the one with it scales economies, right? Mm-hmm. It's like you're always going to lose to the people with the scaled economies.
Right. At the very worst, very best case, that's who you're losing to. Worst case, you're just losing to some other loser who's racing you to 0. So,
then you feel terrible at the same time.
Yeah, you just both lose. I was going to say that the customer wins, but in a certain way they don't. If that business is not bringing enough money to operate well, that means the service is probably going to suffer. So now everyone's losing. The business is losing and the customer's losing, because you just can't operate effectively at that level. You can't pay people properly. You can't polish things properly, all that stuff.
They cut corners, all that kind of stuff.
Right. Yeah, I think that holds true for any service.
Say it again.
I think that holds true for any service, and a lot of products too. Some people know, you're buying a piece of crap sometimes, but you do it anyways because it's so cheap. But as the service itself grows, like whatever it is, how big it is, I think people are going to generally look at reputation and quality first. If it involves their home or livelihood or something, or in your case, if it involves their money, where's the money going? They're probably going to spend a lot more time looking at the quality aspects, and they'll still look at price. Of course, price is always relevant, but if you can show that your value eclipses the price, classic value investing, then you're great. But that's much easier said than done, of course.
It takes a while to get there, I think, is the idea. But the truth is, there's people who look for a service and quality above price in every market and every business, right? And you just have to target them and make a decision to target them, right? And do whereas I think if you not you personally, but if somebody tries to be everything to everybody, you end up being nothing to everyone.
At least right away. I feel like every big business, I'm trying to think of an example. I'm sure there's got to be some exceptions, but I feel like most of the time businesses will appeal to very rich people or very successful other businesses first. Mm-hmm. And then that profit margin is what allows them to grow and start offering more services to lower income folks or to lower income customers. And then from there, they can keep moving, I guess, down the ladder while scaling the pie at the same time.
Well, it
does or at least there's something like that. There's some sort of you start at the 1% customer and then you scale out from there as you build your scale. And you actually can serve those lower income or lower average value customers profitably because you get your costs down, but you have to start somewhere that has high margins and focusing on quality probably, at least for businesses that actually get to any sort of scale. I think that's largely what they do. Just like I look at Tesla, for example. I know it's a fun example here, but they started out with like purely on the luxury side, and have scaled up to here now where they're offering cars to all sorts of people. It's still pretty expensive, but way down from what it was before on a like a inflation adjusted basis. So just one more recent example, but I feel like you see that in a lot of areas.
I think that's true. And like you can actually see it from the other end too. Like since I was thinking about airlines, like a lot of airlines start as the low cost option and then they kind of grow into like,
Is that right?
Because there's usually a gap in the market at the bottom in the airline business because it's such a terrible spot to be. So they want to move up the ladder.
Huh.
And then
that might be a good. I'm not as familiar with airlines, but I'd have to guess that part of that probably has to do with regulations, because it's not exactly a free market. It's pretty far from it compared to maybe some other industries. Granted, everything's got regulations, but well, I think that has anything to do with it.
I think some of the time the airlines get choke on the wages because they get unionized after a while, and then it becomes. Whereas if you're brand new, you can just hire people for $10 an hour and like just
maybe
throw them on the plane, right?
Yeah, it could be. Yeah, you don't have to deal with that. Yeah, your moat is the lack of all that baggage, perhaps. Yeah, okay, I could get behind that.
Well, I was just on top of mind because I was looking at Spirit Airlines. They're in a potential buyout with JetBlue right now.
I didn't know that.
Which is a pretty interesting special situation. Like if people are interested in.
Who is buying who? That JetBlue is buying Spirit, or the other way around?
JetBlue Spirit was going to sell to, is it Frontier? That's a low cost airline.
Yeah,
right?
that's another one.
So they had a deal. Frontier was going to buy them, and then JetBlue came in and offered $1 billion more. So they said, okay, we'll go with those guys. But it's stuck in regulatory world, like where they're saying the Department of Justice is saying we can't allow this because then people won't have the low cost option. It's terrible for consumers. But
right.
But if it goes through, like I think Spirit's trading at $16 right now, and the offer price is $33. So if it goes through, you double your money.
Wow. I guess people are factoring. They're definitely factoring in the regulatory risk there of it not going through. Is that that's a big way. How far away would the merger be? Like any idea? When did it start?
It started like a year and a half ago.
Really?
And the Department of Justice started fighting it in March.
Okay.
And they're going to go to trial this month. So I think the over under is 9 months. So being a lawyer, you should look into this.
Yeah. Oh man, you want to get me fired up? Tell me about antitrust law. Oh man, but yeah, that's interesting. That's such a heavy discount. So I'd have to guess that investors don't think it'll happen.
It's basically priced as if it's not going to happen.
Yeah, if it's only a year away, we'll say, that if it does happen, you get a, Monish Marai # easy double.
Yeah, and I just don't know how much downside there is too, because it's pretty well priced for an airline like at $16.
Are they so they're operating profitably right now?
They aren't. I think the theory is they were quite profitable before COVID, so I think it's still kind of COVID effects, and eventually, but their revenue's up like 50% since 2019.
Yeah. And you'd have to guess in a recession, they would do better than the other ones because they're the low cost one, right? You would think. Yeah. Interesting. Maybe we end on that. That's a nice actual stock idea. We were just talking business, sad war stories for this hour. But
yeah. So if anybody's still out there, send us your ideas on Spirit Airlines, and we might do maybe we can do an episode on it.
Is that an upcoming Contrarian Corner episode?
No, but I do have a teaser. We're talking about diversification. So my next video is going to be a company that diversified and is potentially de-diversifying.
Okay, undoing the damage. All right. Well, we will stay tuned. And thanks for coming on, Mike. It's always a pleasure talking with you.
Yeah, thanks, John.
For those of you who want to stay tuned for Mike's upcoming Contrarian Corner episode, whenever that airs, be sure to subscribe for that. We actually have another Firm Discussions episode. James is show that he's running. That will be going up next week, so stay tuned for that. Subscribe if you haven't already. Hit that bell icon so you don't miss future notifications of when we do our episodes, because the time does vary sometimes, and we're trying to put out more content throughout the week as well. Like I said at the top of the show, if you're interested in hosting your own show on Punch Card Investing, please let me know. If you go ahead and reach out via Instagram at Punch Card Investing, that would be and if you have a show idea there, just reach out, let me know, and we can talk details from there. It would be great to just continue to grow this community we have and share the platform with other creators in the value investing space. So with all that said, thanks again, Mike, and thank you everyone for watching. Until next time.
Thanks for tuning in to Punch Card Investing. The contents of this show should not be used as investment advice or as a recommendation to invest in a particular security. Please consult with a licensed investment advisor if you need investment advice. All investments carry risk and the potential for monetary loss. Thank you, and see you next week.